Welcome back, ladies and gents, to the coziest part of Solana's finest podcast, Sol Brothers, markets, prices, charts, and technical analysis. Welcome to the show.
Hi, how are you, Simon? I see you got a haircut.
I did finally. Yeah, I looked like a homeless person. That is not my opinion. That was repeatedly told to me by my girlfriend. So I really had to do something. But yeah, I'm back looking like a Balkan boy because I'm also back in the Balkans. So
I see.
Got to blend it.
Well, I disagree. I think you look really handsome. I liked your hair.
Yeah, well, I mean, at some point you gotta trim that beard. So yeah. Anyway, I definitely got a haircut, but also the Solana chart. That was a good pivot. We dropped further down last night, and there was basically the US future market open. Gave us another flush in the Solana chart. We flushed a bit more than on other charts, actually, which is interesting. But yeah, I'm ready to take a look at where we're at in terms of charts and prices when it comes to Solana. And I'm ready to chat a little bit with you about some new macroeconomy updates that we got straight from the internet.
All right, well, I got the charts pulled up, so let's dive right into it, my friend.
Cool. So technically, we've been tracking this larger C wave here to the downside since a while now. And that C wave to the downside is also basically inside of this fourth wave correction here, this larger fourth wave correction. This is the weekly chart of Solana right now. So we are zoomed out, which is probably the best view you can look at this chart. Because here things still make sense. We had this 1, 2, 3 third wave to the downside, and then this fourth wave correction to the upside. Now, it looks like the fourth wave might be over because we did reach the resistance area up here and then had this sharp drop to the downside here. So basically following the scenario, sure, we could have seen higher fourth wave correction here, but it's overall quite a weak market right now. So I think it's not surprising that we got rejected quite early in a lower fib level here and then are now on our way back down. And the way back down is currently playing out almost as expected as well. We had this attempt to break out to the upside here. This was the fourth wave kind of high point that we saw at $150-ish. And since then, we've been pulling back in a 1, 2, and then a third wave to the downside. And then the fourth wave has been going sideways a little bit here. That took us from, like 10 days, I would say, not like 1 week. The fourth wave here took 1 week to play out. I think there's different ways to count this, really. But from my point of view, this was an A to the upside, a B to the downside, a C. And then the leg down here, the fifth wave, has been playing out since a while. You could also count the C wave back here, which is kind of unusual because it would be basically a lower C than the A, but that's also possible. That would be just a fourth wave that stretches over time, not price. So that's also feasible. Whatever, it doesn't really matter anyways, because what happened after this is that we broke down last night from this fourth wave, and we basically completed the 5-wave structure, the internal 5-wave structure here. And now the question is where we go next. And I think this could be a larger A wave that basically played out here, like this whole move. And then now we are basically in a B wave correction that could bring us anywhere up here. And then we could see one more low all the way down here to complete the whole 5 waves of the larger count. So that's basically my next stops here, that we have a higher wave count here inside where the fifth waves are now completed, and now the B wave is playing out. So this price push here, if the fifth wave is really completed, then this price here could now, bring us close to the $150 again. It could be an overshooting B wave, could be even higher. But in an ideal case scenario, I think we can draw the fib levels here, and then we need to reverse them. And then this would bring us, anywhere in this price section. Actually, we're seeing the first rejection probably soon up here, but the B wave most likely goes a little bit higher than that. Normally, B waves retrace, in this case, into the resistance zone up to 0.786 fib level. So that would bring us all the way here to $140. So that's the new target area here for this next price recovery, if we don't flush further. But this reaction here to the fifth wave looks pretty promising. Like there has been like a good impulse here to the upside. So I think this looks like at least the flush for now is down. Only if we see something crazy happening this week at market open on the macroeconomy level, then we might push lower. But I think for now, it looks like we're recovering a little bit. And there are some signs as well that point towards recovery on the macroeconomy side of things. And I think we're going to talk about them as well.
It's funny that you mentioned recovery in the macro economic context, because I actually have a bit of a different point of view on this. But I'm really curious to see like how you're seeing the macro markets right now. So you want to dive right into it, my friend?
Yeah, that's it.
Yeah. So the first topic that we're going to cover, of course, is that the U.S. dollar looks like that it's going to have another. I mean, it is early in the year, but it seems very possible that the U.S. dollar closes 2 years in a row in the red, right? And this hasn't been seen since 2006, 2007, the recession right before the housing crash in the United States in 2008. And so just kind of curious, what are you thinking about like kind of macro economic recovery in the context of the US dollar, or like what are you looking at?
I think this is a red flag for the mid to long term because the dollar strength has been trending downwards since a while now, and I don't think it's going to trend upwards in a zoomed out charts anytime soon. But this also means that the US does have to be quite aggressive with protecting their their stance in the world, right, in the global world, in macroeconomy globally. So they have to be aggressively pumping the markets basically to pump their own kind of dollar, and that works
Their
best
own
by their own shitcoin. Yeah, if you say it's not a shitcoin yet, it's still being widely used, but I think it will become a shitcoin at some point. That has been kind of the path of history, anyways. Like there's always a flippening or some sort of cycle happening. It's really interesting right now to see how like 100 years ago, we were working our way up to the Great Depression in 1929. Now it's 100 years later, and we're working our way up to the next Great Depression in 2029. Like this is totally coincidence. There's no time loops you can put on cycles. They don't happen in. I don't think they don't happen in such fixed time intervals, especially in our global exponentially growing economy. I think things become quicker. But still, it's funny to me because if you look a little bit and you study how the Great Depression 1929 kind of worked and what happened back then, you come to the conclusion that we might work our way into a similar scenario right now. Obviously on steroids, because markets right now are very different. Back then, the concept of a stock was new. Back then, funny enough, they talked about stocks how we talk about crypto right now. They saw it as, okay, this super high risk play only for this cabal insiders, you move the markets, and this is what stocks used to be. And then the one of the great American banks back in the day, and its director came into the markets and was like, okay, we need to open this up for everyone, open it for retail, and then everyone came in and piled in. But some sort of bubble formed back then, and the macro economy and the environment didn't help. But now I think we're working our way up to a similar scenario potentially. But in the long term, right? Like I'm not saying this happens in the next couple of years necessarily. Could take another 10 or 20, right? But I think all of us have this feeling, and all of us know that it can't go forever the way it goes right now, with like national debts exploding to an extent where you can't even pay the interest rates at some point. Like something needs to happen. We just don't know when, right? And I'm not a crash prophet that says, okay, this year we're going to go down. Not at all. I actually think this is bullish right now. That's why I say I'm looking for relief rallies, because I think the US government needs to protect their stance in the world by doing things that will actually pump the markets in the short term. So I think 2026, for example, could be a very good year. Usually that's what happens anyways. Like, let's say we crash in 10 years, right? Then I think until then we'll have a great run. That's how I see the market. So, and you just need to position yourselves right. And right now the dollar is definitely not the the best place to park your money, as it looks like.
Yeah, definitely not. In fact, if you look over at the institutions, we were looking at this right before the call, and you can see that institutional dollar exposure is, down to about 40%, my friend. But early 2000s, it was about high 60s. So yeah. I mean, probably not the best place to park your money, my friend.
That is actually very interesting. There's a lot of detail here when it comes to this, probably. Like, you'd have to also assess where is the money fleeing from, right? Like, who's offloading their dollars? And I can actually give you one answer. Do you have an idea, like, who's offloading their dollars the most in this?
I want to say it's like Japan or it's China. I'm probably completely fucking wrong there, but I'm thinking it's some Asian country. Shiesty motherfuckers.
I agree with you. I don't think it's Japan. They have other beasts to battle right now. They actually have their own fucking problems. But that's a different story. But China is definitely the opposite. Like, they don't want to do anything. They want no exposure to US anything right now. And I wrote this piece as well on Twitter like 2 weeks ago, because I saw a report, the TIC report from the US government, that explains foreign money flows. And you can see in that report 2 interesting stats. And I think that explains the money fleeing out of the US dollar a lot. China has been dumping US treasuries since 2013 very aggressively. They essentially sold more than $680 billion worth of US debt of treasuries into the market. They're like, we don't want your debt anymore here. It's gone. Like, give us our money back. So they sold $680 billion worth of treasury notes into the market. And at the same time, UK and Brussels aggressively bought US debt, US treasuries. So they loaded up on US debt. And at that same time, China is also one of the biggest accumulators of gold, copper, oil, more resilient assets that have nothing to do with US dollar. I think China is offloading themselves a lot from US exposure, US dollar exposure right now, because they're scared that they could be sanctioned or something if something happens geopolitically. They don't want their US treasury bills go to zero when they're being sanctioned and frozen. That's why they actually dumped them at a 20% loss, which they did by selling all of their US treasuries, which seems weird as an asset manager or as a portfolio manager. Like, why do you sell all these good US treasuries at a loss? But I think it makes sense because they're just scared of complete kind of loss of the whole thing if it's being sanctioned. But that's a bit alarming.
Yeah, I can't say where I heard this, but I was having a stablecoin conversation with a friend, and he oh man, I got to be really careful what I say here. But basically, Beijing is freaking out. We know that Beijing is freaking out. That's the closed door conversations because U.S. stablecoin dominance, right? Like, they actually are at a loss because China's official stance is like, we don't like stablecoins. We don't want a yuan stablecoin. They don't want nothing to do with it. They don't want a permissionless world, right? Like, CCP in China and what they're all about is being like central authority over money. I get that, right? What do you do when a permissionless technology takes over the world? And now every other business has really high money velocity, but because Chinese companies are being told explicitly by the Chinese government, like, hey, like, you're not allowed to participate in this economy, it's like they're at a loss now. They're not able to like, money flows for a business really matter, right? Like, if all the foreign companies have like instant settlement, but then Chinese company are still working on old rails, like day 2, day 3 settlement, for any one company, it's not going to kill it, but in aggregate, right, it just means that the Chinese economy will move slower. So it's like, now they have to play the stablecoin game because of Trump, and they feel very pressured by it, and they don't really know what to do. And further, more like, all the stablecoins now are backed by U.S. Treasury bills, so they're kind of Circle and Tether totally listen to what the U.S. government says. So if the U.S. government says, like, freeze China's companies' money or freeze China's money, they can do that, right? So China is like really at a strategic disadvantage, especially when it comes to this new internet money, my friend.
I think the only way out would be to accept stablecoins and come up with their own Tether kind of. They need a private company that is closer to China that springs out their own US dollar stablecoin on the market.
Yeah, but they're like, but you get the China math, right? The China math is like, I don't want to do that, but then the other part is like, but reality is telling you have to. But then the China math is like, I really don't want to. So it's kind of like, they can't make up their minds about what the fuck they're supposed to do.
Mm. Yeah, the US actually needs stablecoins if you think about it. Like for them, this
Yeah.
is great. This is because the whole the whole global economy, like they don't give a shit. They just want a stable asset in their crypto portfolios or whatever they're doing with digital money. And right now, US dollar is still the best one, and they just buy these stable coins, and they essentially just giving money to the US government in forms
Yeah.
of debt, which is exactly what they need right now. So very interesting. Yeah.
Yeah, crazy shit going on, man. The dollar is tanking. Institutional holdings of dollars are decreasing, and some people like to be called daddy.
Doing it, I'm helping Europe. I'm
So me.
helping NATO, and I've until the last few days when I told them about Iceland, they loved me. They called me daddy, right? Last time, very smart man said, "He's our daddy. He's running it." I was like running it. I went from running it to being a terrible human being.
You can see in you can, without looking at the faces of the people in the audience, you can tell how they look like. I can feel it under my skin. I can feel them sitting there and like, what the actual fuck is he talking? who called him daddy? And
Dude,
why is he talking about Iceland anyway? I don't even get the whole context.
I know. So first of all, he fucked. So there's so many talking points there, right? Like,
Yeah.
One is the most shocking thing. It's just like, is this AI? Like, literally, I looked this up for a solid 20 minutes. I'm like, there's no way this is real, right? And every single time I say that, it's completely fucking real, right?
Yeah.
And you caught the second thing, which my dumb American friends, including myself, did not catch until later, is that he mixed up Iceland with Greenland. So, I mean, I personally have a hard time making fun of the president for that because I think I probably would have made the same mistake or at some point in my life if I were ever president.
But he's the president and he wants to buy the country. He should know. He should, you know what I mean? It's the same with the Venezuelan oil that he didn't look up if it's actually useful or not. Like he sometimes I feel like this guy is just, obviously he has like his scripts and people give him what to talk about, right? So most of the time he doesn't have any clue what he's talking about, really. And you can tell that a lot of times. Like they ask him questions. Like there was another clip while we're at it where the reporter asked him, why did you pardon CZ from Binance? And then he kept like talking for 2 minutes, and he just said the same thing all the time, which was, I think he's a good guy. He's a very good guy. This CC, very good guy. I know him personally. He's such a good guy. He has no idea why he got pardoned. Like he pardoned him, but he doesn't know why. Like he usually does a lot of things where he doesn't really have the context because he's the president and he can't know everything, I guess. So that's fair, but you should that's also a sign of disrespect, right? Like he's not.
Yeah.
I mean, obviously the whole thing is disrespectful. The whole Daddy Iceland thing, but okay, whatever. I guess
Simon, we have vibe coding, we have vibe trading, and now we have like a vibe president. It's just the vibes, man.
Yeah. He's vibe bleeding.
But Simon, like, let's get into the substance of it, though. Like, memes aside, there's actually substantive news on the tariff front. So you want to tell the people what agreement was made over at Davos with the former president of Denmark?
Yeah, so they did meet, and like the NATO Secretary General met with Trump and I guess more of the U.S. government, and they're talking about a framework that should kind of help them to coordinate what to do with Greenland and especially with the Arctic Security Cooperation. Most likely the reason why Trump wants Greenland is for security reasons, for military reasons. And yeah, now most of the plans that were initially made when it comes to tariffs are at least halted, right? I don't think they're completely off the table from what I saw when I did a little bit of digging. I think they have, like, as long as they have this framework now, they have something to talk about. They have like a way out. But I think it's not the like using tariffs as leverage hasn't been fully renounced by neither Trump, even though he said he's going to pull back the 10% from February for now. But still, I think he's going to keep it active for if the framework doesn't please him. But also the European Union Also keep their anti-coercion instrument that they pulled out last week, and it's basically a package that is really bad for United States trade with the European Union. If they would, really execute that one, that is, I don't think Trump could handle, or I don't think they want it. So they also keep that on the table as leverage. So for now, I think it's just both sides have something to as leverage to negotiate with, and they keep it handy. But I think for now, it looks like they are working at least on a collaboration instead of confrontation.
I prefer that. Taco, Trump always chickens out, brings out the tariff hammer, and he goes like, I'm gonna hit you with it. And then Europe goes, try me, bitch. And then Trump's like, all right, I was just kidding.
Yeah, he did it before, right? So it's not really surprising.
Yeah, whatever. Fuck that guy. Anywho, Simon, I think that wraps up the coziest part of the podcast. It got a little violent there towards the end. You wanna take us out?
Yes, sir. Ladies and gents, thank you so much for tuning into this part of the show. If you want to learn more about Solana and get some Solana news, then make sure to also watch the other videos that we have on our channel where we talk about all things Solana. And if you're more into macro and technical analysis and charts, then these clips here are good for you. But either way, make sure to subscribe to our YouTube account at SolBrothersPod. That helps us. And we will see you at the next one. Thank you so much. Peace out.
Adios.